Assalamualaikum warahmatullahi wabarakatuh and a very good morning to our beloved lecturer, Miss Salina binti Abdullah. We are here to present the answers for FAR620 Group Project 1, Question 1G, Consolidated Statement of Financial Position as at 30 June 2021 for Joy Berhad's Group. Before we start our presentation, I would like to introduce my groupmates first.
Alright, Assalamualaikum and hi everyone. My name is Lukman Bin Isnin.
Hi, my name is Khairi Azim bin Muhammad Fadir.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Aiman bin Muhammad Arif.
Assalamualaikum Miss. My name is Muhammad Afiq bin Shaiful Azrim. For this presentation, we will divide the explanation among us to 5 parts. The first part is non-current asset, which will be explained by Khairi Azim. Next is current asset, which will be explained by me, myself, Muhammad Amirul Afiq. Then the equity part will be explained by Muhammad Aiman. And lastly, the non-current liability and current liability will be explained by Lukman Bin Isnin.
Okay, let's begin with non-current assets first. Let's go. For preparing a consolidated or financial position, we need to make sure that we add all holding companies' assets plus with its subsidiaries. For non-current assets, let's start with property, plant and equipment, also known as PPE. It shows that we need to add 1,330 million ringgit from Joy Berhad plus with 660 million ringgit from Rose Berhad and 330 million ringgit from Heaven Berhad. But why we did not add Night Berhad's PPE? This is because Joy Berhad only owns 40% of capital share in Night Berhad. This shows that Night Berhad is only an associate to Joy Berhad and not a subsidiary company. And then we add 5.5 million ringgit because there is an increase in fair value of building in Rose Berhad. We also need to deduct 0.22 million ringgit. That is the depreciation for the increasing in fair value of the building. The calculation will be 5.5 million ringgit divide it by 25 years. Next, we need to add investment in associate that is from Night Berhad. We already calculated this value in our workings in question 1D. The value for intangibles we can get by adding 246 million ringgit from Joy Berhad, 128 million ringgit from Rose Berhad, and 23 million ringgit from Heaven Berhad. After that, we need to add 15 million ringgit in intangibles because Rose Berhad recognized an internally generated brand in Heaven Berhad at 1 July 2020. As the series of B ends at 30 June 2021, we also need to amortize the intangible asset by 10 years. The amortization is 15 million ringgit divided by 10 years. The value will be 1.5 million ringgit and to be deducted in intangibles. Afterwards, we can get the value for other investment from Joy Berhad and Rose Berhad. Remember that we cannot add 5 million ringgit from Night Berhad because Night Berhad is an associate. Lastly, we add goodwill in the non-current assets. We can get the value of goodwill from the question of 1A and 1C. The total of non-current assets is calculated and shown at the right column. The total of non-current assets will be 3,522.37 million ringgit. That's all from me. Thank you.
Thank you to Khairi Azim for the explanation on the non-current asset. Now, moving on to the next part, which is the current assets. In current asset, we have inventories, account receivables, bill receivables, bank, and loan due from rows. The amount here is also obtained from the statement of financial position and also from the additional information. For the inventories, the total amount is 346.5 million. For the workings, we must total up the number of inventories in holding, which is Joy Berhad, and the subsidiary is Rose Berhad and Heaven Berhad. From the statement of financial position, which is 222 million plus 76 million plus 54 million. Then minus 3 million is obtained from the calculation for additional information number 1, which is the unrealized retained profit for the goods. The remaining goods unsold is 5 million times with the sale price to Joy Berhad at cost plus 25%. Therefore, 25 over 125 times with 5 million, we will get 1 million, and then plus with 2 million unrealized profit of the opening inventory of Joy Berhad, and lastly minus 2.5 million. Next, the total for the account receivable is 605 million. The working for the account receivable is 335 million plus 180 million plus 90 million. This amount is also obtained from the statement of financial position, and we must total up the amount of account receivables in holding and subsidiaries. For the bill receivables, the total is 165 million. The workings is 140 million plus 35 million is the amount from the statement of financial position. Then minus 2 million and minus 8 million is obtained from the additional information number 4, which is stated 8 million in Joy Berhad were issued and the discount of 2 million. The total for bank is 1,060 million, and the total for the loan due from Rose is 10 million. Each amount is also obtained from the statement of financial position. Hence, the total amount for the current asset is 2,186.5 million. So, the total asset after summing up the total of non-current asset and the total of current asset is 5,708.87 million. That's all from me. Thank you for listening. Next, I will pass to the next presenter, which is Aiman.
Hi! Thanks to Khairi Azim and Afiq for the explanation about non-current asset and current asset. Now, we move to the equity. To get the same balance to current asset, equity plus with current asset and non-current asset. Now, I want to explain about equity. There are 7 figures in equity. First, ordinary share capital. Second, 10% preference share capital. Third, 5% redeemable preference share. Fourth, group retained profits. And fifth, asset revaluation reserve. 6, other components of equity. And last, non-controlling interest. The amount for ordinary share capital and 10% preference share capital can get from the statement of financial position as at 13 June 2021 in question. The amount ordinary share capital is 2 million and 10% preference share capital is 500,000. The amount 20 million of 5% redeemable preference share can get from additional information number 7 because the company acquired new shares. The amount of group retained profit is 467,280. The calculation is 346,028 plus 211,253 profit for the year minus 40,000 ordinary dividend paid minus 50,000 preference dividend paid and get the total is 467,280. The calculation for the new balance asset revaluation reserve is 100,000, 156,800 plus 7,200 revaluation. The calculation for other components of equity is the new balance is 92,600 plus 2,000 for the increase in fair value of investment based on information in statement of changes in equity and get 94,600 for the new total. The total for non-controlling asset is 1,309,040. The balance brought forward is 672,000 plus 593,392 acquisition during the year plus 66,048 profit for the year plus 800 revaluation minus 11,200 ordinary share dividend minus 12,000 preference share dividend and the total is 1,309,040. So we get the total equity is 4,554,920. That's all for the equity. Thank you.
For today, I would like to share with you guys how to get the non-current liability and also the current liabilities based on the question, the G question, which is the consolidated statement of financial position. Okay, so basically our group has identified and we just noticed there is only one item under the non-current liabilities section, which is the debentures. We're just adding the debentures from the Joy and Roseburg Height, which is 500 million and 500 million plus with 50 million, and we will get the amount of 550 million for the non-current liabilities. Okay, so that's it for non-current liability. Alright, so let's proceed to the current liabilities. Okay, basically we have identified the items involved in the current liabilities, and it is the account payables, absolutely. Okay, the bills payables, the ordinary dividend payables, the preference share dividend payables, the interest payables. Okay, and there's 2 loan involved, in this question, which is the loans due to the Joy Berhad and also the loans payable. Okay, so before we go any further, just a quick tips from me. Okay, although I'm very sure majority of the students has already acknowledged about this, but I'm just sharing the tips on how to recognize the liabilities in the question, in case you are very confused on how to recognize it. Just always look up for the keyword payables, just like account payables, loans payables, interest payables. Okay, I'm just sharing the tips, okay, because it is from my lecture. Okay, so let's go to the first one, current liabilities, account payables. Okay, so basically to get the amount of the account payables, it's not very difficult. We just adding the total of the three company, which is the Joy, the Rose, and the Heaven Berhad, and the amount is 231 million, plus with 109 millions and also 48 million, and we will get the total of account payables is 388 million. Okay, so the next one is the bills payables, 90 million plus with 12 million, and we have the highlighted amount, which is we minus with 10 millions, because the 10 millions we can get from the additional information number 4. Okay, basically the additional information number 4 is explaining about the highlighted amount that I'm just say right now. So the total of the bills payables is 92 millions. Okay, so the next one is ordinary dividend payables. Just you can get it from the questions, 51.2 million. Okay, and the next one also preference share dividend payables, also you can get from the questions, 62 million. Okay, the interesting part for the interest payable, you can get the value of the interest payable is 750,000. So how do we get the amount of interest payable? Okay, basically we just multiply the 20 million with the 5% interest. Okay, and not to forget, we need to multiply it with 9/12 because it is 9 months on the accounting period. I mean, it is not wholly the accounting period. It is only 9 months, because we know accounting period consists of 12 months, but the interest payable is charged on the 9 months only, on the 9 months. Okay, so we can get the amount 750,000. Okay, so we can get also the loan. As I said before this, there's 2 loan involved in this current liabilities. The first one is the loan due to the Joy Berhad. Okay, you can get it from the question, the 7 million. Okay, the amount. And the lastly is the loans payable. The amount is 3 million ringgit. Okay, so you can look up the loans payable based on the additional information number 3. Okay, based on the additional information, it is stated that there is a loan payable. Okay, and it is a 3 million ringgit. Okay, so to conclude, the current liabilities involving in this question, the total amount of current liabilities is 5708.87 million. Okay, so it is the total for the current liabilities plus the equity, but I'm just explaining about the liabilities. Okay, so I think that's all from me. Thanks for your time. I hope you guys understand, and thanks also to our madam, Miss Salina. Thank you. Assalamualaikum.